I didn't see Edgare, and I know that William Byun is not joining us, so I think I'll assume Edgare is coming soon, but we'll get started anyway in the meanwhile. What I'd like to do is cover today renewable energy specifically. I think you're in very good hands with Yanis and Pawan, my fellow panelists. What we'll do to begin with is I'll ask each one of them to say a few words about themselves and about their firms. Then I'll pick up with an initial set of questions and a conversation with them, and leave plenty of time for questions from the audience. But I'm not going to do what Peter did. So if we don't get any questions, I'm going to call on the audience or some audience members to ask some questions and engage with us. So with that forewarning, maybe Dr. Singh, you can tell us a few words about yourself and about your firm.
I represent PTC India Financial Services. PTC India Financial Services was promoted by the PTC Group, which was initially known as Power Trading Corporation. In fact, PTC came in India as a body to work as an intermediary between power utilities and IPPs when the reforms in power sector started in India about a few years back. It's a private sector company, but promoted by government. It has a unique structure. And PTC Financial today is also a private listed company, and we have equity participation by our promoters, also Goldman Sachs, who were initial promoters, and Macquarie as one of the promoters. We do financing in the entire energy value chain, which includes equity, debt, and mezzanine capital.
I represent ReEx Capital Asia, and we provide a suite of services purely dedicated to clean energy and renewable energy. We cover Asia Pacific, and we offer services such as capital raising for projects. We do financial structuring. We help investors to find M&A targets, and we conduct M&A advisory, due diligence, and we also provide a pure consulting work in the area of clean tech, clean energy. So we work with governments, DFIs, World Bank, ADB. So we raise capital for projects like proven technologies, but also for more emerging technologies. We do technology transfer from developing or developed countries to developing countries. And as I said, I mean, all our projects are in Asia Pacific. Most of our projects are in Southeast Asia, but we cover the whole region, and our investors are from all over the world.
Thanks very much. Thank you, Yanis. Let me tell you what we do. So I co-founded and I run a renewable energy and greenhouse mitigation climate change business headquartered in Singapore, which is called Sindicatum Sustainable Resources. Since inception in 2005, we have raised about $500 million, which we've put into principally China, India, Thailand, Indonesia, and the Philippines. And all of that money has gone into greenhouse gas mitigation projects. We typically capture, in effect, pollution and then turn it into clean energy. And preferably, the pollution is from captive sources. And we then sell that energy back to whoever gave us the pollution, for example, a coal mine or a sugar mill, with the excess exported to the grill. So we've been investing in Southeast Asia, India, and China since about 2006, with all the white hair consequences that you see on my head. So I think with that perspective in mind, maybe I'm going to begin the questions by asking Pawan, when we look at, I mean, we're very motivated to invest in the Indian renewable energy sector. We have significant assets, people, operations, and cash flows in India relative to our size. What always mesmerizes me is, I mean, why would a country with, in your view, what signal is India sending us when 400 million people, don't have any power, and 700 million people have a limited access to energy, when it appoints the Minister of Oil as the Minister of Environment at the same time, which is something that the Congress party, that this government has done a few months ago. So what signal should we take away when India appoints the Minister of Environment and the Minister of Oil and merges them into the same person with both portfolios? And second, related to that, and the reason I'm asking this question is, Mr. Lokian Min from Semcor before was referring to subsidies that are available in this space. Globally, fossil fuels benefit from $2 trillion in subsidies, whereas clean energy benefits from $80 billion in subsidies. But in India in particular, the fossil fuel industry benefits from $140 billion a year in fossil fuel subsidies of one type or another. And these aren't my numbers, these are IMF numbers. So how are we, the renewable energy community, maybe supposed to look at investing in India when it presents us with this much fossil fuel subsidies that are stopping perhaps more money coming in on the one hand, and on the other hand, has effectively a conflict of interest in government with the minister holding two, let's say, conflicting portfolios?
India is a democracy, all of us know, and it's the largest democracy in the world. So there is always a prize for being a democracy, a democratic country. And we have a parliamentary system of the government. And that is why, in India, in energy itself, we have about 8 ministers, 8 ministries. So unlike many countries where a single energy minister would be there. And once the same question was posed to the Indian Prime Minister and said that, why do you have so many ministers doing the energy management in the country? He said that this is the price I pay for having a coalition government. So if I have a bigger coalition next time, if not a single party is voted to power, but 5 parties are voted together, they form the government, then I'll have to have, instead of 8, 16 energy ministers. And instead of, today we have a ministry of conventional and non-conventional energy. He said that there would be there's a ministry of renewable and a ministry of non-renewable. So he said that there will be a ministry of renewable and non-renewable also. So that's the price we pay for being a democracy. But having said so, this is a special situation which came, when one of the ministers had to go and the government was in its last leg, so probably temporarily some additional charge was given to a minister. So it's not a business as usual decision, but it's business as unusual decision which happened. Going back to the issue of subsidy going to the fossil fuel, well, primarily that's been drawn. This is a sector, in fact, this conference is all about power sector and renewable energy. So unfortunately, we might get the impression that the entire amount is going into the power sector, but it's not going into power sector, but it's going into the petroleum sector. That's where the subsidy happens because the petroleum projects have to be subsidized. And that's where the whole thing happens. It's not that one is promoting petroleum products in the country, but it's generally used by the masses, so governments normally like to keep the prices low. As far as the renewable space goes, it has caught on. Last 10 years, both from the government policy front and also from the industry side, there has been substantial growth. About 3 years back, India had roughly 10,000 megawatts of capacity in renewable. And in a very short period, they have gone up to 22,000 megawatts. So that's capacity addition is happening. What's very important here is the whole capacity addition is not driven so much by subsidies, but it is driven from the fact that today many of the renewable sectors have become viable in themselves, and they are selling power at grid parity level. And today, from financial closure perspective, many of companies like us, we prefer lending to a renewable project than to a conventional project. So going forward, renewable sector is likely to pick up. Issue of petroleum getting subsidized, unless there is, we have a situation where we have less of petroleum products being used for automobile industry and major basic industries, probably the subsidies would continue for some time to come.
I think that's a very interesting point. I'd just like to pick up on it. Feed-in tariffs are a major driver in terms of investing in Thailand, for example, and the lack of feed-in tariffs is a major component of the relative less investments in renewable energy in Indonesia. Going back to India, I think what you said is absolutely correct. One of the key characteristics of the renewable energy market is that people are investing, in effect, without feed-in tariffs. To what extent do you think the investment environment is going to improve for renewable energy in India, given the new government that seems to be likely to emerge in the next month or so?
In fact, one is not an astrologer to say which government will come to power, but the trend shows that that particular type of government may.
Let's assume it's Mr. Modi.
Okay. Assuming Mr. Modi is there. See, one thing has to be very clearly seen is that, the policies are evolutionary. They don't suddenly change, and particularly in a democratic country. And many things in India are institutionalized. It's not so much personality-based, but it's system-based. So we already have a regulatory regime. Good part of Indian energy system or power sector, both on the renewable front as well as conventional energy, is that we have a very strong regulation in place now, fairly independent regulator. None of the other sectors of economy enjoy this kind of regulation which power sector enjoys. Power and telecom are the two sectors in this country who enjoy very good regulation. So already we have a kind of a standard of regulation. And particularly on the renewable side, we have a federal government and we have a provincial government. So there are about more than 25 provincial governments, and there is a federal government. The feed-in tariff for renewable is decided by the provincial government. So each provincial government, depending on their own policies, they decide the feed-in tariff. And already the last 3 years, they have been coming up with a lot of progressive policies, both on the solar and wind side. And that is why the figure which I was quoting, that investments have happened. If Mr. Modi comes, what's likely to happen is, one, is already it's happening in the country in anticipation of somebody's coming to power. Already the impact of that is felt. One is that, of course, the foreign currency movement which has happened in India. So probably if the stability in foreign currency happens, we will find a lot of capital inflow happening, and quite a bit of that might flow to the renewable sector. Apart from that, we probably may have better clarity on the land acquisition. But the sector which is going to benefit more is not the renewable, but it's the non-renewable sector, because that's where the issues are really stuck up.
Thank you very much. I think turning to Mr. Boudjouher for a moment, we've covered India in outline, and I think what I'd like to do is maybe hear from you as to the Southeast Asia markets, in particular the high population ones, Thailand, Indonesia, and the Philippines, with respect to your expectations as to renewable energy flows this year into these markets, and next year, perhaps looked at compared to what you've seen since you set up the firm back in 2006.
All right, 3 countries. I mean, these countries are, I mean, as you know, completely different in terms of the policies and the state of incentives and development in respect of renewable energy. So they're not moving at the same space and at the same pace, and the market is very fragmented, and it's how we position our company in that region compared to big investment banks. Actually, is to know the market in this region, which is very fragmented. So. I mean, if I take the Philippines, for example, we see a lot of traction in the Philippines, mainly because of the non-subsidized tariffs, obviously. So if I take the example of solar, the feed-in tariff is there, but how it's structured doesn't favor the development of solar projects, actually, except if you are one of the big boys and you know, with the right relationship. But for like a smaller size project, and it's more difficult to you know, get the project on balance sheet until you get the 80% completion or 85% completion. So, but the non-subsidized tariffs allow a project to get developed, and we see tractions in that area. On the bilateral PPA.
Tractions compared to last year and the year before?
Yes, yeah. In terms of now bankable bilateral PPAs.
In the Philippines? In
the Philippines.
And what about Indonesia, for example?
Well, in Indonesia, I mean, is disappointing. I mean, the banking sector is completely, I mean, it's not at the same level as in Thailand and the Philippines. There's absolutely no non-recourse finance available in Indonesia. The policies are on the paper moving forward, but in reality still in the limbo, basically. With, you know,
aren't we just waiting for the presidential elections?
Yeah, I mean, the fact that this year is an election year, I mean, doesn't help. So I would say this year it's good to be on the advisory side, on the consulting side, but on the project development it's a bit tough.
So India like plus, Philippines plus, Indonesia minus. What about Thailand?
Thailand is I mean, it's plus, definitely, but it's kind of wait and see at the moment for obvious reasons. Obviously, I mean, it's well advanced in terms of, you know, the liquidity in the market, banking sector, projects, regulations, feed-in tariffs. But again, if I take the example of solar, you know, the move from the other to the feed-in tariff is still lagging. So regulation, you know, is not clear yet. You know, the move from the other mechanism to the 25 years feed-in tariff for solar, for example. So still a plus, but a kind of wait and see what's coming next.
Thanks very much. I think, Andrew, I was going to turn to you. Andrew Affleck, the CEO and co-founder and founder of Armstrong Asset Management. Andrew, can we hear from you on? Can the panel here have a question from you on these issues?
Sure. We've heard a lot today about, I mean, solar generally, and I think for most of the part, the reference has been to ground-mounted solar. Perhaps the panel could share their thoughts on rooftop solar, for example, and the opportunities. We're seeing already in the US and Europe the uptake in rooftop solar now growing quite dramatically. Can Asia and Southeast Asia in particular speed up the implementation and learn lessons from what's going on in some of those developed markets?
That's an excellent question. Thank you. I think if I may suggest just an order for an answer, perhaps Dr. Singh, you can comment on rooftop solar in India in particular in about a minute of time, and then after that, perhaps Yanis, you can comment on the three other markets in Southeast Asia.
See, in India, the renewable space, in fact, the wind was the first mover, and the capacity which we have, 22,000 megawatt, out of which almost 90% is there in the wind. And that was primarily driven from the fact that it was grid parity. Solar came later on, and solar was almost twice the price of grid parity prices. So they were always slow starter, and they had to wait for government subsidy kind of thing. And the person we are talking about who will take over as the new prime minister, he's the one who moved solar energy in that country in his own provincial state when he was there. So that's where we have started from. Subsequently, once we had solar farms, and from there we have now started experimenting on the rooftop. Rooftop has very small capacity as on date, but has a huge potential. Why so? Because on the solar side, India is not equally blessed. All the regions are not equally blessed. So that is one. Second is, of course, the grid issue would be there, transporting power from one area to another, one region to another. So that is another, so for that, the solar rooftop provides a wonderful opportunity. Another reason why solar rooftop also is likely to take off in a big way is that in India we have differential tariff, one for the commercial buildings and offices and another for the residential buildings. So because of that, even if the solar rooftop is available at a price which is higher than the grid tariff, but it would be much lower than the price at which the commercial concerns and offices buy. And they have huge space available where these installations can be made. So some beginnings have been made in rooftop, and on the policy front also, in fact, we have an SPO obligation, solar purchase obligation, by all large power purchasers who consume more than 1 megawatt of power. And now the government is undertaking a policy whereby a certain portion of SPO has to be rooftop. So rooftop it's not taken off, but has a fairly good potential in coming times.
Thank you. Mr. Boudjouher?
So that's a very good question. I mean, especially since recent announcements and big names, big banks getting into this space like Goldman Sachs and co. So and Sunsip, for example, in Singapore. So that has created a lot of movement and questions and players asking what's the best business model, what's the next move, is it profitable, what's the best structure to finance rooftop. So I mean, I agree that the market is smaller than ground-mounted. I'm going to talk about Singapore and
Sure.
estimated at 1 gigawatt, for example, for public building in Singapore, so reasonably small. But I mean, there's definitely a potential in big cities in the Philippines, potential in Bangkok. So yeah, and again, we are down to the question of the profitability, the feed-in tariff, and retail tariff. So countries where the business models fly, so definitely Singapore, Philippines, based on retail tariffs, and also Thailand, obviously on the other mechanism and the expected feed-in tariff at 5.9 baht. So that flies. Indonesia, I can't see that happening without any drastic increase in retail tariff. And then, so the question is what sort of profitability, return on investment you can get in investing in rooftop. And it's when it's important to think about the right business model, and we've seen recently structures where you have yieldco getting cheaper money, debt. So the key aspect for getting the right business model in that rooftop business is the access to debt and access to cheaper money. And you get debt when you get scale. So at the moment we see dash for size, as we had dash for gas in the UK. So it's dash for size, and the key question is not how big, is how fast you're gonna gather and aggregate a portfolio of assets so that you can refinance and then flip the assets or get IPO.
Thanks very much. Yeah, my own comment, Andrew, would be that I think just looking at rooftop solar and how it was scaled in the Western United States in particular, it's very clear that I think what we'd like to see is communities, bottom up, getting together, aggregating assets themselves so that there is some scale that's presented, and so that from a credit perspective, and we've seen that actually happening in several counties in the US, so you enhance the credit risk, in effect, by these communities coming together. The Philippines is a very interesting market from that perspective because it's actually organized at a local level in that way. So it's a matter of whether the local captain is actually able to muster all that community to get rooftop solar scaled up so that it is of interest to investors and markets when most of them won't look at anything if it's less than $20 million.
Can the panelists share the view on the investment opportunities in Greater Mekong area, and what is your comment on the risk assessment? Thanks.
Sorry, this is in which area?
Greater Mekong area, so it's beside Myanmar, Laos, Cambodia. Because we've been hearing so far mostly on India, Indonesia, and the rest.
Fair enough. I mean, I think I'm going to pass that question over to Yanis because he's got more of a regional perspective than I do. In our case, we just took the view that these four markets, have most of the population are maybe slightly ahead of the Mekong area, and so we're focusing our resources there. There's so much to do in Asia that you have to specialize to some extent, not only by sector but also by country and from a risk perspective. But I think it's a very good question. What do you see happening in the Mekong area compared to the geographies that we just discussed from a flow perspective in renewable energy?
Well, yeah, I mean, we have the similar quality problem as you have. I mean, in terms, we have a certain amount of resources, and we need to allocate these resources to the projects and our clients. So from the Mekong area, unfortunately we don't see a lot coming. I meing, we've done some work in Vietnam. We're trying in Myanmar. We haven't done a lot in Cambodia.
So, I mean, it's fair to say that they get a lot less love and affection than the other Southeast Asian market.
Yeah, I mean, we like Vietnam, for example, but our experience it's usually very slow to move the projects forward, and not only in renewables. I mean, in infrastructure, in power, in general, it's very slow. As I said, I mean, we cannot always allocate our resources as we wish. The other thing is the quality of the projects that we see. Because that's the point I wanted to make also, is we talk about a lot about policies and the lack of structured policies and visible and stable, but also there's the other hand of the equation. It's about the quality of the project, because our focus is on the second tier of project. The first tier are usually well structured with a robust development team, and with well connected. So they don't need advisors like us. They don't need door openers like us. They are already connected, and it's already investors are queuing. So we are helping the second tier projects, the not so good project, to become good projects. And it depends on the project team, it depends on their willingness to improve the understanding of how important it is to improve the quality of projects before raising capital, and the importance of presenting good quality projects to investors. So that's also the second challenge that we see in this part of the world, the Mekong area.